Back to Sapna in just moments from now. In the meanwhile, proxy advisory firm IIAS calls on regulators to implement a majority of minority voting mechanism for approving promoter remuneration, citing a steady and significant rise in the compensation paid to promoters. Hetal Dalal, President and COO of IIAS, is now joining in. Hetal, thank you very much for joining in. You have reviewed nearly 900 proposals over the last couple of years. So first, tell us, by how much has the compensation gone up? Why is this such a big issue?
I think the compensation levels, and we've seen this over the years, has outpaced revenue and profitability growth. And therefore, there is a certain delinking of compensation with company performance, and that's a level of concern. In pockets, compensation has been significantly high, upwards of 50 crores, and one or two instances upwards of 100 crores. And therefore, we find that in these pockets, there is a significant pushback that we see from investors. But it's the promoters' votes that carry through these resolutions, and therefore because promoters have their voting power, it allows them to get paid at will. I think we also find that nomination and remuneration committees have been diffident in actually setting accountability for the kind of compensation that promoters are getting. Therefore, fundamentally, we believe that there should be some kind of rein-in of promoter compensation. But our ask of saying that the resolution should be put to a majority or minority vote is a fundamental tenet of conflict of interest, right? I own 52% of the equity or 55% of the equity, and I vote on my own compensation. It basically is a fundamental conflict of interest. And therefore, we believe that like related party transactions, this resolution too should be put to a majority of a minority vote.
And what you're saying is that when the promoter compensation comes up in the AGM, only 10 resolutions were rejected in the last 21 months. But had we followed what you're saying, that a majority of the minority shareholders need to approve it, then 216 resolutions would have been rejected out of nearly 900? Is that the analysis?
Right. Yes, that's right. And this data comes from voting patterns, right? We just look at removing how promoters have voted and then see whether the resolution is passed or not. You will find that the pass percentage drops from 99% to 75%. Essentially, 1% gets defeated, which is 10 resolutions. Another 25% would have actually not passed if it had been a majority of minority vote. And this is for the period of resolutions that we evaluated from 1st of January 2023 to 30th of September 2024. So that's a 21-month period. If you look at the same pattern for 2022, we found that 34% of the resolutions would not have made it to the majority of minority vote. And this was for 2022 data. So the pattern continues. You're seeing this year on year that promoters are voting their own compensation. Investors don't like it, but because they have majority vote, they are allowed to pay themselves effectively at will.
Hetal, you've spoken about investor concerns, and two concerns stand out significantly. Number one, you've spoken about a lack of adequacy of disclosures in resolutions as far as promoter pay is concerned. And the second point that you've highlighted is there is actually involvement of promoters themselves as members of the nomination as well as the remuneration committee. So, number one, talk to us about these concerns and how do you expect regulators to go ahead and address these concerns?
Sure. I think when we look at compensation disclosures for, let's say, professionals vis-a-vis promoters, right? In a lot of the compensation disclosures for promoters, there is really no performance metrics which is disclosed. So if the promoter gets paid 1% commission of profits, and it's a flat 1% in several instances, sometimes it can even be up to 5% of profits. The question is for achieving what, right? On the contrary, when you look at compensation for professionals, you will see a reasonably clear articulation of what actually drives variable pay. And therefore, in promoter and compensation for professionals, you see a greater articulation of or alignment of pay versus performance than you would see for promoter compensation. Also, in several instances, we've seen where companies don't perform as well, or they're actually underperforming their peers in the same industry. If commission sort of drops, fixed pay goes up. So the kind of compensation that promoters get still remains the same, independent of company performance. So fundamentally, we believe that the disclosure level should include a full cap on the absolute level of compensation. You can't say 1% of profits. Let's say Reliance Industries says we're going to pay the promoter at least up to 1% of profits. What does that number really mean? Or even Infosys for that matter, right? So size drives a lot of these things. And for companies with a reasonable size, the the regulatory thresholds of 1% to 5% really don't add any meaningful constraints. So another cap on the absolute level of compensation. Second is, what is the accountability for the variable pay? What needs to be achieved? And even, and I know companies differ from saying that we don't want to put out targets saying revenue growth of 15% and EBITDA growth of 5%, but at least what are the bases on which the variable pay will be paid out is something that companies need to articulate. Whether these actually have any of these ESG metrics as well, or is just going to be, a P&L number, which one of the parameters of P&L that will drive the entire compensation. So even for compensation for professionals, one of the things we find lacking in disclosures is the quantum of stock options that will be granted to these professionals over the proposed tenure. So today you are voting on the next 5 years appointment and their compensation, but stock options is a very material element of the compensation structure which doesn't get really disclosed, and it's left to the NRC to decide as and when the company performs and as and when they actually do the grant. And there we find that a significant proportion of the compensation really cannot be estimated. So some of these things need better clarity. We want, from a regulator standpoint, our view is that one, just if you put it to a majority of minority vote, all these issues get ironed out, because the quality of disclosure improves dramatically, just as what you're seeing has happened as far as related party transactions are concerned. All the other pieces, and they're likely to face a significant pushback given that corporate India is, 2/3 controlled by families. But in the absence of that, at least mandate these kind of disclosures which talk about, how does the pay align company performance and what is the kind of final cap that you're looking at. And some of these elements need to be better detailed out, or at least provide a framework. If you look at RBI, for example, right, RBI for bank CEOs has a very structured framework where they say that there is fixed pay and variable pay will be up to 300% of fixed pay. And that again gets split between how much will be stock options and how much will be cash pay. So there is a model. Now you can argue that because, bank CEOs are custodians of people's money, we have brought this in, and you can't do that for all public sector, but you can serve all sort of private sector. But you can certainly bring in a degree of structure which for disclosure that helps investors understand exactly what is the compensation number they are voting upon. I think that's really broadly where we are. I missed your second question. Can you just repeat that?
Hetal, one final question, before we wrap up this particular discussion. Citing a specific case of a company like Religare Enterprises, the company performance maybe has lagged peers, but if you're looking at the promoter compensation there, it's been quite high, along with stock options also being given. Do you have a view on that particular company? And other than that, any examples you can cite where you feel that there should be more stringent regulation coming in as far as promoter action or promoter compensation is concerned?
See, I think whether promoter compensation or professional compensation, one of the things that NRCs need to do is simply disclose how they benchmark the compensation. Once they're compelled to disclose how do they create a peer, and companies have disclosed this well, government companies do disclose this. Once they disclose how the compensation for either the promoter or the professional has been benchmarked vis-a-vis peers, vis-a-vis size of company, vis-a-vis growth or potential growth, I think that brings in a lot more balance in the remuneration structure than simply looking at it at a point in time.
Hetal, thank you very much for joining in. It's been a great conversation and quite the eye-opener. So thank you, with the data and even the recommendations coming in from IIAS. We leave the markets fairly stable in the last 1 hour. So the Nifty still holding pat at 23,300. The high today was 23,400, roughly there. But that slip happened in the first 1.5 hour of trade. And after that, things have been steady. The mid-cap index again off its high, but still holding on with a gain of a little more than 1%. Banks continue to outperform. It's a wrap on Trading Hour on that note. Thank you for watching. Stay tuned. Halftime Report is up next.